Ladies and gentlemen, we are back. Not really, because if we look at the year to date, we're still down 30 grand on the portfolio. As you know, two of my biggest holdings, Robinhood and SoFi, are down substantially. And that's why we're seeing this amount right here. But no worries, I haven't sold these stocks. I don't plan to anytime soon. So it's not like technically we have lost, at least not yet. I wanted to go ahead and look at some of the options that I've been selling in the last day. I was going to say 2 days, but Sunday was 2 days ago. Most of these are covered calls. In fact, all of these are covered calls from today. The only time I will have a put that we'll see on my spreadsheet that I use to track all of these trades is if I'm rolling that put. And I talked about in my last video how my plan to roll some of these deep in the money puts at a very far out expiration just to avoid getting exercised early. And before we get started, if you like this kind of content, please consider subscribing. That way you don't miss any videos in the future of me documenting trying to make some extra income selling options. And if you're looking for supplemental information, all of the links are in the description, including a course if you want to help out the channel. It's pretty affordable. And it is International Beaver Day, so thank you for celebrating that with me today. So if we go over to my spreadsheet that I use to track all of the options I sell. So far, we're on track to have one of the best months in terms of premium gained from selling options. I've probably gone harder than ever selling covered calls. Usually it's primarily puts, but I've pretty much stopped selling puts for the time being because I've used all of my freed up money. And now in turn, it's selling covered calls. And so far this month, we're 7 days in, $1,952 just in premium. A lot of these names probably don't surprise you. Like I mentioned before, if we see a put that I sold today, it's because I rolled them. The SoFi put for $12.50 that expires in a few weeks, I got $5 in premium. So that's not what you would typically get for a deep in the money put a few weeks out. You wouldn't get just $5. So that's why the amount's so little, because that's the difference of buying to close the current put and opening this new one. I'm continuing to sell calls on the SPY, though this really worries me because really all it takes is one bit of good news to set this market back to soaring. So I have to keep an eye on these calls that I sell because I want to roll them if it starts getting near the strike price that I sold them at. Just today alone, all of the options that I've sold, I've made $711 in premium that we see down here. Just as an example, I sold 10 covered calls on SoFi at strike price of $11.50. And these have depreciated a little bit, so if I were to buy to close stands right now, I would have made $17 total in premium after buying the close, because on average I've made $12 per contract. If we look at my SoFi position, we'll see I have 2,500 shares set aside as collateral from selling these covered calls, and I have 4,700 total, so that leaves, if my math is correct, 2,200 left if I wanted to continue to sell covered calls throughout the week. What I like to do typically is sell a few covered calls at a time and not tie up all of my shares at once. In case something like this were to happen where it continues to go up, I can continue to move my strike price if I need to when selling these covered calls. And then the goal here is to take the money with the premium that I get, so this $1,952, and buy more shares of stocks that I like. If I'm selling covered calls on the SPY, I'll take this premium and I'll buy partial shares of the SPY. If I sell covered calls on SoFi, this $120 that we saw earlier in that covered call that I showed you, I'll take that $120 and I'll put it back into SoFi. And that helps me accumulate more shares. And a lot of these shares we see right here just came from selling options. I don't think we're out of the woods yet. There's still a lot of trade war talk going on with tariffs going back and forth between us and other countries. So just because it is a green day, I wouldn't be surprised if we dipped back down sometime the remainder of the week. And then at least for our call's sake, like these 10 that we saw earlier, that might be an okay thing because then we get further from the strike price. I can buy to close and wait for the next week to sell even more. And if it does continue to go up, I'll continue to roll out these covered calls until it inevitably dips again. So that's what's going on in my neck of the woods. Let me know what's going on in yours. I hope to talk to you in the comments. And thank you so much for watching. I really appreciate it. I hope to see you in a future video.